This is your LMAX exchange technical update for Tuesday, November 21st, 2017, euro dollar. So not much change to the euro outlook right now. At the moment, the market is in a bit of a neutral state as it trades between 116.90, which was a previous breakout zone from last week, and 118.80, which is the right shoulder of a head and shoulders top. A break above 118.80 would take the pressure off the downside, or any pressure off the downside, and likely negate the head and shoulders top, suggesting that the market could be poised for a resumption of gains in 2017 to fresh highs and beyond. At the same time, inability to establish above 1880 will keep the focus potentially on another downside extension, keep the head and shoulders top alive, but we would need to see a break back below 1690 and then ultimately 115.55, that low that we had seen back on the 7th of November, to get things going back to the downside. So again, right now between 1690 and 1880, nothing to talk about. Need to see a close above 1880 or back below 1690 for clear directional insight. Sterling dollar. So cable, yeah, it rallied up a little bit over the past several sessions, but ultimately it does not change the short-term picture, which is this consolidation that we've seen for over a month now since early October. The market will need to break above 33.40 or back below 30.25 for a clearer short-term directional insight, although as we continue to stress, the outlook in 2017 has seen the market push up through a 127.75 previous range resistance that suggested and suggests that the market is putting in a longer term bottom. So if the market does decide to break down below 30.25, any setbacks should be limited as the market looks to carve out a longer term base. At the same time, if the market decides it wants to push through and establish back above 33.40, then the market could be seen accelerating back towards and well beyond the 2017 high, which comes in at 36.60. So overall, consolidation right now, waiting for a break of that consolidation. Short term, if it breaks to the downside, could see setbacks, but they should be limited to 27.75, while a break higher would get the market thinking about the next big upside extension as this market shows prospects for a longer term base. Dollar yen. So with dollar yen, the market is focused on seeing how it responds if it is able to establish below 111.65. And if the market does keep and hold down below 111.65, this would open the door for an acceleration of declines back down towards the 2017 low, which is the extreme range low for this year. This market has been in a range well capped into the 114 to 115 area, but well supported down around the 108 to 107 area. And so if we do establish below 111.65, it will suggest that the market could be poised for deeper setbacks down towards that 107.32 2017 low from back in December. So that's the story right now with dollar yen. At this point, it would take a close back above 114 to delay what is right now a more bearish outlook in favor of range resumption. Euro Swiss. Euro Swiss continues to push up to fresh 2017 highs. The market is now focused on the top side. The structure is clearly constructive at the moment, and the market now contemplating that next big push towards a retest of that support that had been so well defined for such a long time up until January 2015 at 120. If we do see setbacks, which are certainly possible, they're expected to be supported in the 114 area, with only a break back below 112 to compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie dollar has been in a firm downtrend since the market topped out by a plus 2-year high back in the month of September. The market has now dropped from above 81 down into the 75s, and we're coming down to test some key measured move extension territory and psychological barrier, which coincides with 75. At this point, daily studies are starting to look a little bit stretched, so setbacks should find some form of at least short-term support down in this area here to allow for the market to unwind a little bit, but rally should be capped in favor of a continuation of declines right now, with only a break back above 79, ultimately to alleviate the immediate downside pressure in Aussie dollar. Dollar CAD. So dollar CAD looks like it could be readying for a resumption of this recovery or a continuation of the recovery that we're seeing off the plus 2-year lows back in September, just shy of 120. The market is looking for that next upside extension, which will be confirmed on a clear break above 29.17, the recent high, opening the door for what could be a push easily back above that psychological barrier at 130 if we consider a measured move upside extension on a break above 29.17. Only at this point back below 124 here would compromise this recovery in dollar CAD. Kiwi dollar. So New Zealand dollar has broken down, trading to a fresh 2017 low in the previous week, opening the door for deeper setbacks. The market could now trade back down towards the next key level of support going back to 2016, May of 2016 at 66.76. Ultimately though, daily studies are starting to look a little bit more stretched here. So there is risk for a bounce to allow for those studies to unwind a little bit before the market considers its next move. But certainly the pressure here remains on the downside, and it would take a break back above the 71 handle to likely delay the bearish outlook. SPX 500. S&P 500 hasn't seen much of a change of late. We have seen a few period of market not managing to push to a fresh record high, but at the same time, setbacks are in no way compromising of this current intense uptrend that continues to play out as the market continues to extend its run of record gains, most recently just shy of 2,600. And so the risk continues to be on the top side for a break through 2,600. And we would need to see a breakdown back below and a close below 25.44 at a minimum to take the immediate pressure off the top side. Overall, again, medium and longer term studies do warn of the need for a significant pullback, but right now, no such confirmation. And at a minimum, 25.44 needs to be closed below that level to suggest that we could be seeing potential onset of an overdue correction in this market. Gold. So gold overall very well supported, making higher highs, most recently a 2017 high at 1357 back in September. This sets the stage for another upside extension, with the market ideally supported ahead of 1250 in favor of a break back above 1357 and towards a retest and break of the 2016 peak at 1375 further up.